All right, good morning, everybody. Today is Monday, September the 22nd. Appreciate you joining us here for our live session. Now, what you should see on your screen is a chart of a stock called D-Wave Quantum. The ticker is QBTS, and I've drawn a little arrow on where we should have bought, and it's not that I'm Monday morning quarterbacking this thing. This was an actual trade we recommended to all of you a week and a half ago. If you're a subscriber of this channel, you get the video every single Tuesday. It's called 2 Trades in 2 Minutes, where I try to share with you 2 low-risk, high-probability entries. And this is the one we put out. It would have been on 23, so September the 9th, which was right here. And I said if it breaks above 16.5, you want to buy. You're going to risk about 8 to 10% on this thing. And if you follow along, you are up 63% on this stock in 9 days. This is not luck. It is not a coincidence. This is the result of a methodical and proven process to beating the market. And today, I'm going to show you how to do it. So we're going to start at the top and kind of work our way through. If you're here for the first time, welcome. My name is Ross Givens. I am the head trader here at Traders Agency, and we're on a mission to try to help 1 million traders and investors achieve financial freedom. And one of the best ways to do that is focusing on these high probability type setups. And it's a pretty straightforward process. So what I'm going to share with you today is, number one, the 3-part process we go through. It ends to market, sector, stock. Very straightforward, but it's what you need to understand. It's how you get the odds stacked in your favor. I'm also going to cover this exact trade setup. It is a very repeatable process. There is a proven pattern that appears on this chart that oftentimes leads to these explosive moves. And I'm also going to show you how to keep your risk very small. Unlike some people who deliver 63% gains in a week and a half, we're not cowboys diamond handsing our way into this. We're not taking wild swings. We're not taking big risks. In fact, we almost never risk more than 10% on any one of these entries. So let's start at the beginning. I want to kind of walk you through it. And if I pass over your question, I apologize. I'll try to come back and get all these. But if I just start, I'll go through this, then I'll look at all the stocks you want to look at, and we'll try to find some new opportunities. Okay. So first things first, you need a bull market, right? You can make money in bear market, sure. There's all these con men on YouTube and Instagram and X saying, "Oh, this strategy makes money, 52 weeks a year, every year." It's total BS. Don't listen to them. The fact is, when you've got an S&P index doing this, like what took place with the tariff situation in February and March, everything's going down, right? When the market just really rolls over, all correlations go to 1. It's going to be tough. And so you want to avoid those types of situations. We, of course, look at things like sector health, and we look at net new highs and a handful of other indicators we could discuss in a minute. But we look at things that let us know the market is healthy. When you've got an S&P 500 index printing yet another new all-time high, when you've got stocks that are having a record rally, 37% over the last 5.5 months, you are in a bull market. So the path of least resistance is long. Right? We want to be buying stocks. Now, by the way, if you would, hit the like button or the heart button or the thumbs up. I don't know what it is in this video, but I appreciate that if you would. And we're going to see if we can get some more people on here and kind of help as many as we can. So number one, you got a good bull market. Now, the second thing is, where do we want to focus? Okay, there are more than 8,000 publicly traded stocks. Those are split into both sectors and subsectors. So a sector is like, tech. Inside of tech is semiconductor companies. It is cloud computing. It is software companies, right? All these subsectors. And what you'll find is that every bull market, and this one is no different, the last couple of years are no different, and the one in the 1920s was no different. Every bull market has a theme to it. There are leading sectors or subsectors that are performing the best. And the reason is, it's how Wall Street invests. Okay, what moves stocks is not you and me. It's not our 100 shares or 1,000 shares. What moves stocks is Goldman Sachs and Warren Buffett and J.P. Morgan and, the Notre Dame Endowment Fund and the Fidelity ETFs and these big multi-billion-dollar funds. And the way those guys invest is not like you and I. They don't use stop losses. They're not getting in and out with laser precision. They can't. When you're trying to get 500 million, or like when Buffett bought Apple, he put $50 billion in that stock. There's not that much stock available for sale. And it takes them weeks and months to build up that position. And so when they are buying a big stock like Apple, or they're buying a big sector like they typically do, you'll see that sector rise more than others. So if they're very bullish on nuclear because they think it's going to solve our energy problem and the tech's improving and the administration is pro-nuclear, they're going to be buying SMR and OKLO and GE Vernova and all the big nuclear stocks. And so one thing we do to keep ourselves laser focused on the top areas of the market is look at which areas of the market are rising the fastest. And when you do that, you will quickly identify where Wall Street is putting their bets. And, this is going to change a little bit day to day, week to week. But what this is the top 8 subsectors in terms of performance, just how much they're up or down over the last 1, 2, 3, and 6 months. This is the top 8 out of about 45, so you figure this is like the top 15, 20%. And we're just looking for areas that continue to show up. So nuclear and uranium, nuclear and uranium, nuclear and uranium, nuclear and uranium, right? That is a very hot area of the market. If you look at the nuclear stocks, there's OKLO. We, of course, bought this one back here in May. It went up 150% in just over a month. I can't believe I missed this. You had another setup, and I'm going to explain this to you in just a moment, but you could have also bought right in here about a week ago, and if you did, you'd be up about 60% in there. Stocks like SMR. We bought this one back in May. Stocks like GE Vernova. And so these are leading areas of the market. This is where Wall Street is putting big dollars. And again, like I said, when they are investing, they do so. It takes them weeks or months to build those positions. That means they're buying every day, every week. And that consistent buying pressure is supporting the price of the stock. It falls 10, 15%, they're going to buy even more. And so what you are doing is just going from trying to fish in the ocean and instead looking for a stocked pond. Instead of running around trying to find water, you're just going to where it's raining and putting your bucket right there. All right? And so this is going to be a great way to take the market down from 8,000 stocks, just a couple of hundred. So nuclear and uranium is one very, very strong area of the market right now. The mining and metals. There's been a big gold and silver rush, mining and metals. You see that continuously popping up in these performance areas. Recently, we've seen quantum computing coming back. Quantum computing. And so any area you see show up 2, 3, 4 months, or areas that are beginning to rise, oh, look, it's starting to show strength in the 1 month and the 2 month. That's telling you that money's flowing in there. And so you have, let's say, just take quantum computing, for example. You look at the quantum computing stocks, and then you're going to look for a very specific pattern that I'm going to show you here. I mean, look at these numbers. Now, again, quantum computing has been a leading group over 6 months, over 2 months, over 1 month. It's not as if this is a result of this run. So you know in advance where you want to watch, and look what these stocks have done. Look at Rigetti. Look at IONQ. ARQQ is probably the weaker one, but it's ripping. QMCO, I mean, good God, it's stock went up 40% on Friday. So we have a bull market. We've identified a strong area. What we want to do now is identify when to buy these stocks. How can we limit our risk and get in when the probabilities and the odds are stacked in our favor? And the way you're going to do that is by following this pattern here. Okay? Now, you will see this both after a stock makes a big rise and is digesting, or in this case, after it's made a big fall and is digesting. But what we are looking for is a way to get into a stock without a lot of risk and buy it right at a moment where it should make a pretty big move very quickly. And so this pattern, this one's not really perfect, but it'll serve our purposes, is when shares rise, in this case from $4 to $9. So that may not look like a lot, but this little rise right here was a 100% move in 8 days. And when a stock goes up 100% in a week, it is telling you big guys are buying. Wall Street is interested. This isn't little Sally Sue down the street. This is Goldman. This is the Magellan Fund, right? And so once you get that big rise, what you want to then do is wait for the stock to absorb the supply. Stocks are an auction. It is buyers and sellers trying to agree on a price, and they operate based on a law of supply and demand. Okay, so let's think about this rationally. When demand outstrips supply, in other words, more people are trying to buy or buy more shares than people are trying to sell, the price is going to go up. When there's more supply than demand, it's going to go down. And so our goal, to put the odds in our favor, to make as much money as quickly as possible, is to exploit these areas and find moments when the supply and demand dynamics give us a real edge. And what will happen is it'll make a big move higher, and then some selling takes place, some profit taking. And then these guys that are buying are going to take advantage and drive it back up. And then a little profit taking. And again, and again, and again. And again, this one's not really perfect. I can show you some better examples in a moment. But what you'll notice is you get this kind of shallowing pattern on the chart where these pullbacks get kind of shallower and shallower and shallower and shallower. So, in here it's pulling back like 38%. In here it's pulling back like 16%. Here at the end is only pulling back like 8 or 9%. And what's happening is that supply is being sucked out of the market. Those funds who are actively buying up stock are getting all they can in the $7 and $8 and $9 area until no one else is willing to sell at that price. There are no more shares available at $8 or $9. And so at this point, once they've gobbled up the supply, once they've, bought as much stock as cheap as they can, if they want to get more, they got to pay up. And so what happens here, and the reason we want to buy once it exceeds this resistance, is that now this demand is still there. There's the same number of people wanting to buy it, but supply has dwindled up. And so I want you to envision 100 buyers in a store or in an open mall and 100 sellers. So there's $100 chasing 100 widgets, right? Well, what if someone comes in, a big guy with tons of money, and buys up 90 of those widgets? Now you got 100 buyers chasing 10. That's going to get competitive. They're going to have to pay more for it, right? It's the same thing that happens with the housing market. If you've got a lot more buyers than sellers, name your price. If you've got a lot more sellers than buyers, you're going to start discounting to get them to buy. Same thing in the market. And so when that happens, and when it exceeds that, you've cleared its supply, that's when the stock is now free to run higher. And, take an example like this, which we traded, went up, it doubled in a month. And so this is very similar to the situation we saw in QBTS that I recommended last week. Whoops. Now, you can see it really clear here back in May. Let me bring this up. Okay, so can you see here? Let me get this out of the way. Do you see how it made a big move? There's profit taking, and it shallows and shallows and tightens and compresses. This one is just absolutely textbook. Resistance is clear as day. Helen Keller could have told you it can't get above 8. 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 Where's the resistance? Where's the massive wave of sellers? $8 a share. It ain't rocket science, okay? That's where it can't get above. And so when it does, when the price exceeds $8, that is telling you we have now cleared supply. The aggressive buyers are stepping in. They've, run news stories about how this company's in trouble. They've floated pieces on Market Watch about how the quantum computing sector is overvalued. They've had analysts downgrade the stock. They've sent giant sell orders trying to spoof the market down and chase stops. They've done everything they can to gobble up this stock in March and April and May at this $6, $7, $8 a share range until there's no more stock for sale down there. Look at the volume. There's your big clue. Look down here across the bottom of the chart. Look at how in these pullbacks there's these pockets of like almost no volume. A little on the way up, just very limited volume. They're buying little pockets, just no volume. That's because the stock's becoming harder to buy. And just think about it logically. Pretend it's a bigger company, right? The bulk of these shares are sitting in some mutual fund or an ETF, or, somebody bought it with a 10-year time horizon. They're not selling it, right? Not everything is for sale. There's what's known as a float. A company may have 10 million shares of stock, but the float is only maybe 1 million. That's the number that are actively being traded. The rest are just parked away somewhere. And so we're waiting for that float to get very small. And when you do so, and you do so properly, you can make a very big gain very quickly. And look, the other upside of this, what I think you're really going to like, is you don't need to risk a lot of money. You see, when you look at this pattern, okay, and one of the nice things about the shallowing is, look, this is a big drop, okay? Huge move, huge drop. It's a 50% drop in 3 weeks. It's a volatile little sucker. But once it gets down here, and once they come in and aggressively buy and drive it back up, well, then it shouldn't go back below here, right? That's where the big buyer stepped in. So it pulls back again. And again, it should not go lower. We want to see this kind of shallow, and it does, and then pushes back up. So at this point, it should not get below there. Drive it back up. It pulls back a little. Drive it back up again. So at this point, it should not get below there. And so these that work, like the ones I'm showing you now, that is where you're going to put your stop loss. That's where you're wrong. If this stock breaks out, it should not go down below $6.75. That's your line in the sand. So that is how much we need to risk. If we're buying here at $8, our stop loss is just beneath the swing low. In this case, it was about 15%, what we were risking. And look what you made. On a 15% risk, this thing went up 130% in 2 weeks. So, everyone talks in trading like, oh, what's your win rate? How often? And they expect you're going to see some 90% win rate. No one has a 90% win rate. Paul Tudor Jones is one of the best traders who's ever lived. He's a billionaire. He said he's lucky to be right 50% of the time. The reason he's made billions of dollars is that he's risking 1 to make 5 or 8 or 10. And if you lose 10 or 15% when you're wrong and you make 50 or 150% when you're right, you're going to have a hell of a career as a trader. Where people get into trouble is they don't know where they're wrong. They buy this stock because they saw it on Reddit, or they some friend recommended it, or they see some product. I think it's going up, and then it doesn't go up, and they don't know where they're wrong. They don't know where to get out. I'm down 10%. Do I sell? They're down 15, 20, 30, 40%, and they're holding on because they have no plan as to what needs to happen if it goes wrong. We do. We know exactly where we're wrong. We know exactly where the stock should stop. If it goes below there, I'll take a 15% hit. It's not going to end my career. I'm not going to be on the street with a cup in my hand. I've taken lots of 5 and 8 and 10% losses. But then they go down 40%, it comes back. Oh, I'm finally above where I got it. I'm getting out. And so what they've done is say, okay, I'm willing to risk 30 or 40% to make 10. And that's a good losing formula, right? So we are very disciplined. Now, if you look at this one here, this is the trade I put out. You can go on the YouTube channel and see the video. I put it out here on the night before it broke out. So this is all documented. And, you can kind of see the bones of this pattern. We had sort of a big move. And again, this is not perfect. I like to show you a really textbook one. And when you've been doing this for a while, you'll start to see it, the smaller. But you see that same shallowing pattern in here, right? You see that? See how it just tightened and tightened and tightened, and then you buy it when it breaks out in here, and you get that big explosive gain. And if it were me, I'd probably go ahead and sell the thing. But you can sell half, sell a third, trail to stop, however you want to do it. It'll be a whole other class as far as, when to take profits and that kind of stuff. But this is really a top-down approach to getting into these big, nice wins. So, again, we got a good bull market. We've identified the areas we want to focus on. We're going to look at the nuclear space. We might be looking at lithium. We're going to look at cloud computing. We're going to look at mining stocks. And from there, all you do is look at the top 8, 10, 12 stocks in each one of those sectors. So, I'll build a list. So this is from a couple of months ago, my stock watch list. Because at the time, the leading areas were crypto and digital payments, nuclear, and this is back in April, by the way. These are still paying out. Quantum computing, the stocks I just identified. So we built this list 6 months ago, and it's still printing money. Mining and metals, and artificial intelligence. And here's how you find the stocks. I've got a video on my channel on how to build a watch list. If you watch that, I'll go through this. And in fact, if you want to become a member, by the way, there's a link in here. You should see it there in the chat, tradewithross.com. If you're not a member of Traders Agency, we have a special YouTube offer. It's $5 for an entire year. We do 2 live sessions a week. We share picks once or twice a month. We have some bonus materials like these indicators we give you for free. You can use on TradingView. You get access to our support team. Tons and tons of value there. It's $5. If you couldn't afford $5, you wouldn't be interested in stock trading. So if you want to do that, click that link. It should be pinned there at the top. It's tradewithross.com, or don't. Whatever. But I'm just telling you, it's $5. It's tons of value. Okay. So here's how you'd build that watch list. So let's say we've identified our areas. Let's just start with one. Let's start with nuclear and uranium. Okay. It's really simple. Here's what you do. You pull up a web browser, and you go nuclear and uranium ETF. Okay. And all of these ETFs, ETF stands for Exchange Traded Fund, by the way. So like when you buy an index fund, that's an ETF. If you buy a nuclear ETF, it's just a bunch of nuclear stocks. A quantum computing ETF is a bunch of quantum computing stocks. So there's professionals on Wall Street who are already building these portfolios. Just steal them, right? So number one, the Van Eck Nuclear and Uranium ETF, okay? They're all required to report their holdings publicly. They're going to tell you what they own. So just look for holdings. So let's see. Performance, don't care. I'll handle my own performance. Your returns, NAV. This is a bunch of nonsense you don't need to worry about. Holdings, here we go. All right. And you can download the Excel spreadsheet clicking there, but here's the stocks. Now, they are sorted by percentage of net assets. It may say allocation. That just means what percentage of that ETF is in each one of these. And just like you would do, they put the most money in the ones they like the most and the least money in the ones they have least conviction about. So the top stocks they own are the ones they feel the most strongly about. And look what they are. OKLO, Cameco, ticker CCJ, Constellation Energy, BWX, SMR, Centrus Energy, PEG, NXE, DNN, and just copy those things over. And if you look at our nuclear stocks, look at them. OKLO, Centrus Energy, UEC, SMR, BWX. This is where I got them from. Denison Mines. And so what this is going to allow you to do is take the market, which can be daunting and overwhelming, filter it down to the 3 or 4 or 5 areas that seem to be the strongest. Pick the top 8 or 10 stocks in each of those areas, and you have, in about 15 minutes, gone from a very intimidating world of 8,000 plus stocks and brought it down to a list of 50 that have the greatest chance of delivering gains to you. So once you've got that, hell, just buying these sectors would have done. I mean, I published this back in April. I said, look, you could just buy these stocks, and I bet you'd outperform this year. And if you'd have done so, you'd be up like 80% over the last few months. But if you really want to make money, we then look for this pattern, this breakout pattern I've been teaching you here. Here it was in Coinbase back in May. You can see that same. Now, listen, it comes up, not ready yet. It's still getting deeper. And then it starts to tighten and tighten and tighten. It comes out on a gap on an earnings beat. That's your trigger to buy, and it soars. Robinhood, very similar. Same exact pattern. Nothing overly complicated. Now, these are after a pullback because the market pulled back in February and March, but you'll also see them up at highs. So, like this is OKLO, for example. And this one wasn't really perfect, but you can see it's kind of a downtrending deal here. But you can see a lot of the same characteristics. It's not necessarily about having that perfect resistance level. It's more about finding that shallowing. And you've got this stock that went from $6 to $26 in a month. That's an absolute monster. And then it's counting up, not ready, still getting deeper. Oh, there we go. Now we're starting to shallow. And again, it was not really perfect. It had this little missed move here, but that was the bones of a pretty big move. SMR was another one. I mean, you get this just huge rally here a year ago, last March, from $2 to I mean, that's a 500% move in a couple of weeks. That needs to get your attention. And then just look for these points where it starts to finally come in and tighten up and shallow, and that's where you want to get in. You would have probably bought in here. Your stop loss would have been right down in here. It would have come a little bit against you for a day or two before getting going, but you would have been very handsomely rewarded, and you'd have been up, somewhere in the neighborhood of 140% over the next 2 months. Now, it came all the way down. Don't be an idiot and let the thing come all the way back down against you. It's why we sell into strength or trail a stop or whatever. But then you've got, it kind of did the same thing again. Again, not perfect. These are not all going to be textbook. I've been doing this long enough to spot these in my sleep. If you want to just look for really good ones, I encourage you to do that. But like this one was really good. That was really clear, wasn't it? There's nothing, difficult about this. You're just watching it put in this pattern, shallow up, absorb supply. This is going to take a couple of weeks, a couple of months, right? Don't be in a hurry. Don't get FOMO. You're going to miss these every once in a while. Don't worry about it. You don't need a lot of these 80 and 100% winners in 2 weeks to have a hell of a year, okay? So focus on really clean setups. All right? All right, now I've just passed over about 300 questions, so let me go back and try to knock some of these out. I want to answer any questions you've got, because this is live, this is interactive. I want to help you guys out any way I can. My PVH call option exercise, it is in profit now. Do you hold stocks a bit longer, or do you sell a portion? PVH, yeah, I'd probably just sell it in here if it were me. Soundhound and Lift, Curtis. Whoops. Soundhound looks good. It's not a perfect buying opportunity or anything, but volume's picking up. It's ripping higher. Looks very strong. Lift looks great. It's ripping. It had a big gap, and it's had like 1, 2, 3 inside days. So it's trying to consolidate here, which is typically what you see before a continuation move higher. I think it looks good. Quantum Skate and Path, Michael. Yeah, QS is looking good. Now, this is another great example. This was not a perfect breakout pattern, but do you see a lot of the same characteristics? When you get a stock that goes from 4 to 4, when you get a stock that triples in 3 weeks, it's going to be volatile, okay? This is not Walmart. This is not Johnson & Johnson. These are companies that are worth 2 and 3 times what they were the month before. And so it's not going to be perfect. But, is it going to tighten? Nope, it's not ready yet. It's still getting deeper. Whoa, way up, big buying. Now we're tightening. See? And here it breaks out. Now, I know some of this is Monday morning quarterbacking. It's easy for me to come in and say, I would have bought here, I would have bought there. That's why I started with an example. I did say to buy there. It is publicly on YouTube, so you can see that we're not just going back and woulda, shoulda, coulda-ing our way through the market. But, yeah, this one looks really good. I love Lamp. Oracle, yeah, Oracle's a monster. This stock needs some time to digest this move. Went up 35% overnight on a huge earnings beat. This one is just not ready, in my opinion. You want to let it absorb that. Path and CRISPR. Whoops. I don't know much about UiPath. It's a decent enough stock. It looks fine. It's kind of at a crucial point here. If you notice, sometimes just drawing a line helps, because you'll find in the market that what was support generally becomes resistance, and what was resistance generally becomes support. You see how this $12 area for the better part of a year was support, 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 support. Then it finally crashes through. It's resistance. Now again, it's support, 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 and then crashes through. Now it's serving as resistance. 1, 2, 3, 4, 5. For the last 2 weeks, it can't get above. So it's kind of at an inflection point. Wouldn't be my favorite. I just don't really have a read on this one, to be honest with you. Vance, test. Your test succeeded. I see you, sir. I'm trying to go back through questions, so feel free just to type it again. What's the best app for these? The charting app you're looking at right now is TradingView. It is, by and large, the best trading, or the best charting platform in the world, without doubt. I've tried everything. You can get a free account. You can get one for like $10 a month. As far as executing the trades, Fidelity's easy to use. E-Trade's easy to use. Any of them. Just, it's your personal preference. See what the index will do. I know we're down a little bit this morning. Not much. Okay, pretty much flat. How much of a trailing stop do you do? Robert, generally on a big mover, you want to give it like 20% if you're going to do a trailing stop, 15 to 20. I prefer to sell into strength. And so when it comes to taking profits, this is one of the real hard things. When it comes to taking profits, there's 2 ways to do so. You're either going to sell into strength, you're going to sell into weakness. Selling into weakness is a stop loss. We were wrong, it hit us, we're out. Or a trailing stop. Okay, I'm going to keep a stop at 20% below the price, and if it falls and shows weakness and hits, I'm going to be out. And that's what most people do. There's nothing wrong with that. I kind of combine that with selling into strength. So, for example, and this is, I put this out on Thursday, by the way, when we were up like 50%. So I'm not saying I would have got it at 63, but here we're up 48%. Is being up 48% in a week normal? Is that a pace that can continue ever? No. 5% in a week is nice. 10 or 15 is a pretty good run. 50% in a week is huge. That is a parabolic move. And so, again, go look at my Friday video. I said I would sell here, take some off. Not all of it, right? I may trail a stop of the rest. So where would I put the stop on the rest? Well, I might say, all right, well, where's the last significant low it made? And so, if we had a big, huge up day here, big, huge up day there, it's like right now, I would probably just manually put my stop below that low, like right in here at $22. If it tags me, it tags me. That's the goal of stop loss. People are like, oh, it's going to hit my stop, I better move it. That's why it's there. It's supposed to get hit if it does what it's not supposed to. If it did that, you take a 35% win. But look, from the high, that's about a 18 or so % drop. So you kind of have to pick your poison when it comes to exits. Like, do you want to be there and capture the whole ride in case this thing goes on a 2 or 3 or 400% move? Or do you want to nail down profits when they're good? You want to say, hey, I made 50% this week. I don't care what it does. I'm not going to complain about being up 50% in a week. I kind of do both, right? And it's more an art than a science on the selling into strength. But, when you can see, like, just look at the stock, like, this is huge. That's a huge move. This was a huge move over here. And so, to me, when you're up 30, 50, 80% in a week, 2 weeks, like, I'm going to sell at least half. That's just me. I'm not saying it's right or wrong. Looks like BIIB's been accumulating. Would this be a buy? Biogen. Yeah. Honestly, it looked like it should have broken out here. So, if I'm looking at Biogen, it did look really good. You're right. I agree. It kind of come in, little shakeout, right back up, and tightens and tightens. So from here, I would have expected it to run. And, you'd be up a little bit, a couple percent. But to me, it's like, all right, well, it broke out. It went right into the supply area, and it really hasn't gone anywhere. So if this were my trade and I bought it here, I'd be like, all right, it doesn't seem to have the stamina. It doesn't really want to go. I'm going to roll out of it and get something else. SERV, anyone, says Christoph, saying that wrong. Boom. Oh, yeah, that looks nice. Really nice. This is probably a smaller company. It is 800 million. This is a small cap company. Not penny stock, though. It's big enough. It sees 130 million a day, so it's some volume. And again, it's not perfect, but it does have the same, I think, we want to look at, right? It makes this big move where it triples in about a month. It starts consolidating, getting deeper, and then it tightens and tightens and tightens, and it breaks out. So yeah, this is a really nice day. It is now coming back inside on weakness, but I think it's very buyable here. And if I bought it at this price of around 13.5, I'd probably just put a stop at like 10%. Really, it needs about 15 if you want to give it room. So maybe a stop at like 11.5. But it's broken out. It's giving you one little retest at a breakout area. If you want this stock, I would take it. I'd take advantage of it. Yeah, good call. Somebody asked the difference between Traders Agency and Stealth. Nothing. That's just what we call it. We call this the Monday morning stealth session, or I don't know. We got a couple of monkeys in the back that work on marketing that come with these little names. I don't know. I'm just trying to teach you how to trade stocks. So, but Traders Agency is the name of our company. Yes. Easy to see when looking back, but very difficult to predict. Well, it is at first, Ray, but one of the best things about going back and looking at these is like once you see 50, 100, 500 of these, and you burn this image into your head, you'll start to see it in real time. Oh, silver. Yeah, Casper. Now you're speaking my language. So, yeah, silver is a big picture breakout. Yep. See, I put a video out on this like 2 weeks ago. It's up another 15 or so percent. So look at this with silver. This is going to give you, well, I could show you gold actually, but look at it with silver here. So you can see kind of these shorter term areas where these breakouts take place, just like I've been showing you today. So it's got a kind of a move up, and then it comes in, and it shallows, right? It kind of breaks out from there. But then you can step out to a weekly chart and see these bigger picture moves, like over in here. See how it couldn't get above 26, 27? And this took place over several years, where it comes in, and it shallows, and it tightens, and it tightens, and it breaks out, right? And then if you really go out and look at like a monthly chart, really break this thing out, then you got to put these in log scale, because it's just, otherwise it'll look distorted. But look what we've got here. And thank you for bringing this up. I do have a video on this, but look what's happening. I mean, we have got a 45-year breakout pattern taking place right now in the silver market. So this big run in the 70s, where it went from $1 an ounce to 45, it was a 3,200% move that decade. It was largely to these brothers who were manipulating the silver market, but nonetheless, that's the price silver traded for in 1980. Here we are in 2025, and it's about to get there again. So you get this huge, big, shallowing breakout pattern on silver, that wind breaking out. And listen, this move's not going to happen in a day or a week. It's going to be a couple of years, maybe a decade. But you're looking at silver going up probably 1,000% over the next few years here. And if you look at gold, and I did call this one, okay? You can ask our members. I had emergency like weekend webinars back right in here because once again, if you go to a daily chart of gold, take it from early 2024, you can see this little breakout pattern. Okay, so the big move up, followed by the shallowing, right in there. Little failed breakout right there, but this is the big move. Okay, and then if you stepped out to a weekly chart, you would see this same thing that happened over about a 5-year period. See again here, this much bigger picture. So it's coming in, not ready. Now it starts to tighten and tighten and tighten. And then we step out any further and we go to a monthly chart and you see this big pattern forming from the 2011 highs to 2024. And this is not after the market and after the fact analysis. Ask any of our members. We told everybody we've been long several gold stocks since back in here. That was the breakout at 2000. So when gold and these metals are big commodity runs, they don't go for a week or two. These tend to be multi-year trends, and that's why my target on gold is $8,000 to $12,000 an ounce. And I think we'll hit it sooner than later. I mean, just look at the macro picture. Our government is printing money like they always have. They can't stop spending. We had Elon Musk and a giant cabal of business titans. They are dedicating their time to cutting waste, fraud, and government spending. And at the end of the day, they raised the debt ceiling by $5 trillion. So I think they should all be fired from Congress. But nonetheless, we just learned they can't stop. Republican, Democrat, they won't stop spending. They're never going to stop spending, and they're spending trillions more than we bring in every year. So they are going to cause continued massive inflation. Don't think 2022 was it. Inflation's going to get a heck of a lot worse over the next decade because pretty soon tax revenues are not even going to be enough to cover the interest on our debt. And at that place, the whole market breaks. The bond market fails. Nobody will buy U.S. Treasury bonds when they don't even bring in enough money to pay the interest on them, much less all their other expenses. So the writing is on the wall. The world sees this. They are moving from fiat currencies, and they are heading towards these precious metals. And we're seeing gold, and we are seeing silver, Ron, and we are seeing even stuff like platinum breaking out here, although it's still well off its highs, but you can see how it came out of this pattern here and is now sort of, whoops. I'm watching platinum pretty close because, again, you've got the trend and you've got the big picture, break, and then we're kind of coming in here and shallowing out. So I'm watching platinum for a move as well. But it all lines up, right? The fundamentals, the technicals, and, I don't really go down the rabbit hole of studying the Fed's balance sheets and this. It'll just going to piss you off. And secondly, you don't need to do all that. It's all on the chart. The market is telling you everything you need to know. All right. I'm way behind on questions. Let me see. What about Trox, TROX? Yeah, is this an insider stock we did? We're not buying those on technicals. I mean, it's got a really nice move. It's coming up off the low. It's up 60% in a month and a half. PG&Y. Yeah, PG&Y doesn't really show us much. It's just still in a consolidation pattern. OCGN. Some random stocks here. Oxygen. This looks good. Do you see that shallowing here? It wasn't straight flat across the top, but look at here. You see how after this big move, okay, it was of 130% in a couple of months. That's big buyers. Pay attention. And it starts to shallow, and then here it comes, and nice and tight. Do you see that? When this thing gaps up that morning, you buy it, no questions asked, because you've been watching this for a month. You can do a 15-minute opening range breakout to cut your risk down even further. LHAI. I don't even know what these things are. That was a little new IPO. What is this? Yeah, it's a micro cap. Well, listen, it's a tiny little company. It does barely any volume. I'm not going to trade it, but, I mean, I see it. Actually looks pretty darn good. It might be real good. Was this a SPAC? Is it an SPAC? They always go public at $10 a share. Intelligence-driven real estate tech firm, mobile app, founded and headquartered in Irvine. So a couple of Chinese guys built this thing in California. Property management. Let's see what they do. Link Home. Is there like a Zillow competitor? A lot of these guys will just build stuff hoping Zillow and the other guys just come buy them. It's like, here's $50 million, go away. I don't know, what are they worth? 150 million? Interesting. I might dig into this later. LHAI. All right, look at BE. Bloom Energy. That's beautiful. It's about as pretty as an uptrend as you're ever going to see. I mean, what can I say about this? Ride her till she bucks you or don't ride at all, right? I mean, just hit your wagon to it, trail a stop, see what happens. Trend is your friend. Newton's first law, an object in motion tends to stay in motion, right? Stocks going up tend to keep going up. You might be the sucker who gets to the top. It's what stop losses are for. My gold options are doing great. I bet they are, Gabe. Good job, man. Good. Yeah, let's make some money, right? Oh, yeah, I can stop the ads. I'm sorry. Hold on. I keep forgetting to do it. I've got to delay the ad. They delay by 10 minutes and they pop back on. Just remind me if you see another one. Shouldn't we buy silver coins rather than paper? Yeah, it's personal preference, Kathleen. If things really go the way they could in 10 to 15 years, yeah, you're going to want the physical. You're going to want to have it in your hands that no government can take away. I mean, when Nixon got them off the gold standard, they made it illegal to buy gold for a little bit, I think. Or they confiscated. What'd they do? Take all the gold. I forget what they did. I don't want to misspeak, but yeah, when things get bad, the government gets ugly. So yeah, you could do that. I mean, I've got like my retirement account partially in metals, so I've just got like on the gold side, I've got to split between two things. One is GLD, and you can see. I mean, again, here's the breakout, and this is GLD. It's the gold ETF, right? It's everything I've taught you today. We're in a bull market. Mining and metals has been a leading group. This is gold. This is the pattern, right? You buy here. It's not overly complicated. And in the other half, I've got in GDX, which is the gold miners ETF. You see the pattern there. And think, oh, it's easy to go back. No, I bought it right there. And it's up 30% the last month and a half. Because when gold goes up, gold miners go way up. When gold goes down, gold miners go way down because their profits are leveraged. If they are making a profit of $500 an ounce and then gold goes up by $500 an ounce, their profit doubles. So on a 15, 18% move in gold, that gold miner could double. So it's a way to get more bang for your buck there. Eventually, yes, I'll convert all this to physical gold and put it in a safe. But like this is in a retirement account, I can't pull it. There's a link in there as well, by the way, if you're joining us now. If you want to join us these live, we do live twice a week, one on YouTube, one over Zoom. There's a link right there, tradewithross.com. It is $5. It is nothing. You get an entire year of membership with us. We send out some stock picks once a month or so. We'll give you access to our trading indicator, support staff, all of it. So if you go to tradewithross.com, it'll take you to this page. It is $5. It is about as low risk as you can get. And I'm pretty sure if you're not happy for any reason, you can get 100% of your money back. So click that if you want to join us for these, if you're learning something from this, or don't. Either way. What gold, silver, and platinum stocks did you buy? So, yeah, I've been buying the ETFs. When it comes to retirement accounts, I like the ETFs. When it comes to actively trading, What have we got? We've got, hold on, I'll show you. A couple of stocks we did for our members in Alpha Stocks. One of them, Kinross. We bought KGC. Now, we bought it back here, okay? So, again, remember I told you, early 2024, gold was breaking out. This was April 2024. It was a gold stock making new highs. We recommended it. It's in our portfolio. You can still see it in there now. If you look at the stocks we own in there, this is, again, these are recommendations we made to our members. Whoops, I don't know why it's looking all weird. We bought Kinross Gold here, April 17th, 2024. We're still holding it. We're up 272%. We bought OKLO on that breakout I showed you, up 400%. We bought Big Bear. We bought CrowdStrike on the breakout. We got into Tesla a week, up 27%. Like, we are doing this. But you had a big run up. It then gave you another buying opportunity, kind of right in here, as it came and shallowed and tightened up, breakout, retest, move. It then gave you an even prettier entry here at the end of July. And if you took that one, you'd be up, 48% the last 2 months. So the big names, Kinross Gold, I like. Newmont, NEM is a big one. Barrick Gold, Agnico Mines. If you like silver, Wheaton Precious Metals is one. PAAS, that's Pan American Silver, another big silver name. Typically, these are all going to move together. Like, you want the best. So I'll look at like the RS rating of these. Like, I want to stick to ones that are, like, that's an 82. That's not very strong. Meanwhile, Kinross Gold is a 98. So, like, that's the one I'm going to take. It's performing better. But generally, like, if gold's on a run, all the gold mining stocks are up. If silver's on a run, all the silver miners are up. So just focus on the top 5 or 10. Tell Doc, how do you protect yourself from big swings outside regular trading hours? Philippe, you can't. Yes, and it's a good point, right? He's talking about what happens if a stock makes a big move overnight when the market's closed. They report bad earnings. That is absolutely a risk. That's why risk management is so paramountly important. And that's also why I'll get into these stocks and get a big move up and take some off, because I know there's always risk there. I want to nail down profits when I can. Now, I will say this. Those overnight moves are much greater the smaller the stock is. So some of these stocks you guys suggest, these little $2 micro cap names, those are far more prone to these 50+% overnight moves down than an Apple or a Google or something like that. But yeah, it is always a real risk. And unless you want to hedge everything with put options, which is going to eat up a lot of your profits, there's really no way to hedge yourself against that. So, do things like taking profits before earnings or not buying into big news events that could make massive swings. Teladoc, TDOC, this is one of the leaders in 2020. It's not a leader anymore. Maybe. If what you're seeing is something like this, if it weren't for that area in July, I'd say maybe it's carving out a low in here. It's trying to shallow out and break out. The issue is all this supply. It went up here and spent like a month in this $8, $9 area. Those are people that are going to want to sell when they get back to it. So I would really need to see it come up and tighten some more and then break out through here to buy if it were me. Generally, I am not looking at these kinds. This is what's known as a turnaround, okay? So the stock got hammered February, March, April. And this is where following the best groups is going to help you. Teladoc is a medical health stock. At no point in all of 2025 has medical or healthcare or pharmaceutical, at no point have those stocks showed up on any of these lists. So at no point was I looking for stocks like Teladoc. Instead, QUBT and the quantum stocks were on this list. They were down big in April too, and look what they did. They've tripled, quadrupled. The nuclear stocks like OKLO were down big in March, in April, but they were showing us the leading areas. And look what those have done since. This one's up 380%. So I would not be interested in a stock like TelDoc when you got a market ripping at new all-time highs. You've got interest rates coming down. You got a pro-jobs president. You've got a risk-on market, and this stock is sitting 60% off its highs. That's telling you something. Did I check EMN? I don't think so. Eastman Chemical. If y'all are giving me insider stocks, we don't trade those on a technical basis, okay? Insiders is simply following the insiders at that company. We are looking when the CEO and the CFO and the board and those type guys are buying the stock, they often know something we don't. There will be some stocks that look like this, that surge higher. The odds are not in your favor, unless, of course, you see insider buying and there's somebody that probably knows something. What I'm trying to show you today is how to track these institutions, how to see where the dollars are flowing on Wall Street and buy the stocks that are likely to continue rising higher. No, $5 for the year, True Deny. What time frame do we use to look for breakout? So most of what I do is going to be on a daily chart. The best ones are those that line up on multiple time frames. So like gold that I showed you, remember I went through, it's like the daily, the weekly, the monthly. And look, if you can dive in on like a 5-minute chart and you see the same thing, that's even stronger. So if you want to day trade this stuff and you come in and you say, all right, up, all right, seems like they're buying, it's shallowing up and it's coming in. Yeah, for shorter term moves. But for most swing trading, I'm looking at daily charts. Yeah, any tighter than that and you're really just getting into the noise, which can cause you more pain than help you. Lumen, L-U-M-N, we'll take a couple more and we got to end this session here pretty soon. Yeah, Lumen looks strong. It's coming hard off the lows. I mean, this stock has doubled since April, so it's still well off its November highs, but it's showing lots of strength. Now, this, I'm guessing, was an earnings miss. So this is one, for example, I would have been looking for to break out in here. I've been hoping to buy it, but before it happened, it got tanked. So it comes in, it tightens up again. There you go, and that's the move. So, yeah, Lumen looks fine. I mean, it's not anything super compelling for me to buy, but it's on a big tear day. The trend is up. If I'm betting higher or lower, I'm betting higher. All right, so this is a great question. Is Oracle still a good buy? They say the revenues will 3x in 2 years. Here's the thing. If you were buying stocks based on what the CEO says, you are going to lose money the rest of your life. I'm just being honest with you. Like when you hear that, everyone else already heard it too. Wall Street heard it the second it went out and acted on it. Like, that is not how to make money in the market. The stock market is a discounting mechanism, okay? It prices in all known information. If the market thinks this company's revenues are going to 3x in 2 years, it will price that move in. And it did. There's a reason that this $800 billion company went up 40% overnight. It's because of that information. It is therefore already priced in. I mean, look at the earnings numbers, okay? They didn't beat revenue expectations. They didn't beat earnings expectations. So why is it up 40%? Because the CEO said that. It is all priced in. Unless they do far better than that, it's priced according to that. So the move has happened. Stocks don't go up after the earnings come out. They only go up on earnings if that number was better than expected or the future forecast, the guidance was better than expected. It's like people who call me and say, oh, I saw Apple sold a record number of cell phones last quarter. Should I buy? Not now. It's already moved in anticipation of that. So what we are doing with these technicals is getting in front of this stuff. We're seeing when these Wall Street firms are building these positions in advance because they know more than you and I. They've got better research, better data, a much better connected Rolodex. They're getting into this stuff early. There's a saying in trading that says, buy the rumor, sell the news. That's what it means. They are rumored to be doing this. The stock is going to rise in anticipation of that. Once the news comes out, the stock usually fall. It's already moved in anticipation of that information. It's already been priced in. Luke, when the price is to 200 MA, is that a good time to buy in again? That's too much of a generic question. It's really going to depend on the stock. Like, I generally don't mess with stocks that are anywhere near the 200. I mean, if Oracle touched a 200-day moving average, that would mean it falls 45%. Do I want any piece of a stock that is falling 45% in a bull market? Absolutely not. To me, it's more of a line in the sand. Like, it better be above the 200 and trending higher. If you want a moving average to buy off of, look at something like the 50-day. Okay? So when a stock makes a breakout, like let's take a Coinbase, for example, it put maybe the first touch of the 50. Or Robinhood, came down, breaks out here, the red's the 50. Maybe you buy the first dip to the 50 on a good trending stock. But maybe I'm wrong. I'm sure there's exceptions, but I don't think buying stocks on the 200-day moving average is going to be a money-making strategy long term. How do I get all the industry settings on the SPX chart? Robert, yeah, so I've added two. So like, for example, I would just go into add an industry strength indicator. On the first one, I've got the 1 month and the 2 month. The best 7, I thought it was 8. Best 7, you can make it 6 or 8 or 5, whatever you want. And I position it at the top right. And I've made the table size large. You can do it smaller if you want. And then I've added another one. So just come back in again and say, all right, TA industry strength. Whoops, why is it not showing up? There it is, TA industry strength. You'd add another one on here. I'm going to delete it, but. And this one, I just make, wrong indicator. This one I show the 3 and 6 month. And I put it bottom right. And you could do, 1, 2, and 3 across the top. You could do just 2 of them. You could add this 6 times. There's a number of ways to do it. That's just how I've got it set up. These are the ones I like the best. Is QBTS done? I mean, I don't know. Let's see. Sure as heck doesn't look like it. Gap down. Sold off 5%. Now it's breaking up into new highs. Does it look done to you? It's 7% off its all-time highs. What about that says done? Now, having said that, would I buy it here today? No. And there's a very big difference between I'm not buying because the stock looks bad and I'm not buying because I have no edge. The first thing you need to ask yourself when you buy a stock is, where am I wrong? Down here, where it says buy here, I knew exactly where I'm wrong. I know it should not go below around $15. If you want to give it a little more room, make it 14.5, right? It shouldn't go below there. That's where I'm wrong. If the stock goes there, I'll sell. So I know my risk immediately. I know if I buy here, my stop's there, I'm risking 10%. I am comfortable with that. If I put 50 grand on this stock, I know if it doesn't work out, I'm going to lose 5 grand, and I've accepted it. It's okay. It's fine. That's not going to hurt me. For you, that may be 50 grand or 500 or 50, whatever the number is, right? Accept it. Now, if I buy D-Wave Quantum here, where am I wrong? What price does stock need to fall to if you just say, okay, this is not going my direction? And I guarantee you don't have one. And I'm not trying to be mean about this. I don't have one either. I don't know. I mean, I could make one up. I could say, well, I mean, really, like I told somebody earlier, we were looking at this, I don't want to see it below 22. Hold the last 3 days low. So, all right, well, that's 11%. So maybe you could do something like that. But do I have, a breakout pattern forming? Do I have supply and demand dynamics to say, hey, now I've got little supply, I've got high demand, I've got a great chance of making a big and quick gain? No. At this point, I'm chasing it. And this happens to me all the time. All the time I see a stock, I'm like, man, I want to own this thing, but I don't have a buy. I don't have a buy. And like a great example was like, What is it? What's the little video game? It's not Rocket Lab. Roblox. Roblox. This thing's been a monster. And we were looking at this thing, like in here. I said, this stock, it's a beautiful trend. I want to own it. I didn't buy it because it had been chasing. But look, it's up another 35%. Like you can tell it's going higher. But the buy point was here. Or the pullback to the 50-day, which was right here. Or maybe it's setting up for a new breakout here. Those were the buy points. And, you know, the problem with chasing stocks is one time it's going to work out for you and you're going to start doing it more. And so, you know, I missed it. Okay, that sucks, but I've also got nuclear stocks to look at. Maybe one of these is setting up. I've got mining and metal stocks like MP is beginning to tighten and come inside. That might be a good one. CDE's on a tear. IAG, maybe EM Gold's tightening up here and forming a base. I've got AI stocks that are still doing very well. Maybe I can look to some of these to see if I get a setup, right? So you're focused on those. And if you don't have anything, you don't have anything. I mean, the tough things, and this is the problem I have, is when you have more ideas than you have money. And you get in a situation like we've been in the last couple of months where it's like, man, I got 3 or 4 big sectors that look strong. I got 4 or 5 stocks in each of those that look great. They're all setting up in nice breakouts. They all look strong. And I'm like, my goal is to own 4 or 5 stocks. I want to put 20, 25% of my dollars into each of these, risk little, and then when I make a big move and you get this and you're up 60% in a week, cool, you had a quarter of your account in it. So your entire account was up 15% last week. That's better than most Wall Street shops do in a year. That's how you get out performance. And so when I've got 20 stocks I want to buy, you know, I don't want to dilute my returns. And so I don't have a good answer to solve that other than I'll kind of take like, if there's multiple areas, I'll get my favorite nuclear, I'll get my favorite quantum. So like in April, I bought OKLO here on this breakout, and I bought SMR on this breakout. Those are my 2 favorites. I also bought, was it QUBT? I'm trying to think which one I did. No, I bought QBTS right in here. And I mean, look, Rigetti missed. You know, you go back in hindsight, it's like, oh, I could have probably bought that in there. You know, it wasn't really good with shallow. Didn't get super tight, but it did kind of break out there. You know, might have missed it, but I got it back here. CASY, we'll look at one more and we got to go. I mean, I don't see anything here. It looks fine. It's trending higher. I don't see a reason I would sell it, but it's not like, you know, it's just not, it doesn't trade really well, right? Not saying it's a bad stock, but like the ones I've been showing you, those big high momentum movers, they tighten, they make big runs. They tighten, they make big drops too. But it goes from price discovery to price acceptance, to price discovery to price acceptance, from tight to loose and tight to loose with good trends. Look at this thing. I mean, it's up and down and up and down and up and down and up and like it's just, you know what I mean? So it's not one I would want to trade. What edge do I have? And even if I nailed this thing perfectly, even if I bought the breakout here in early March or April, what am I up 30% in 6 months? You know, that's not enough for me. So if it's a long-term hold, the trend is your friend. It looks good. It's moving higher. Yes, I see no reason, nothing that says the stock's going to fall apart. For a trading stock, it's just not for me, if that makes sense. QM, what is that? Leverage 3M? No. What is this thing? Up 1,700% in a day. I mean, yeah, you know, these are really volatile little suckers. I mean, I don't know what's going on with this thing, but like, I mean, maybe, you know, if it tightens up, you know, look, I'm not getting in front of this stuff personally. I mean, you've seen what I've shown you, 8, 10, 12% risk. That stock fell 50% in a day. It went up 20%. The next day it's down 15. Next day it's down 7. It's up 22. It's down, 30% in here. Like it's too wild for me. If I bought a stock like this, I'd want to risk 40 to 50%. So I'd take a really tiny little position. So even if I did make 200 or 300%, it probably wouldn't mean that much. Is the video you mentioned for selecting sectors and building lists on YouTube channel? Yes. I think it's called How to Build a Stock Watch List. If you go on there and look, Robert, see if I can show it to you. All y'all better be subscribers, by the way. I'm just kidding. Let's see. Videos. How do I do it? There we go. Hit videos. Scroll down. It should be right in there. How to build a stock watch list from 2 months ago. And that'll walk you through it. It's really straightforward. Real common sense. Okay. All right, guys, let's go ahead and end it here. We're about 15 minutes over time, but I appreciate you all being here. If you haven't already, click that link below in the chat. It is tradewithross.com. It's $5. Again, if you don't have $5, don't do it. It's fine. I'm not trying to pressure anybody, but if you do, you'll get alerted to these live events we do every Monday. We do a live session with other analysts every Thursday. We give you a lot of resources like our our sector indicator and market health indicator. We put out some timely tips and stock ideas we see once or twice a month. You have access to our support team, and it's $5 for the year. Not per month, not recurring, $5 for the year. So if you want to do that, click that link below, get signed up, and we'll see if we can't help you. But otherwise, guys, we appreciate you being here. I'm going to try to do these every single Monday, same bat time, same bat place. So join us, 9 a.m. Eastern Time, 30 minutes before the market opens every Monday, live here. And if you haven't already, subscribe to the channel. That way, I think it even pops you an email or an alert that we're going to have a live session coming up. You can go ahead and click the reminder, and it'll pop up and let you know so you don't miss these as well. All right. So thank you all again. Have a great week, and I'll see you live here next Monday.